Gold and silver 2025 returns look tempting. Clients keep asking me, should we invest now? Before you decide, let me tell you a 300-year-old story. In 1720, investors went wild over South Sea Company stock. Prices soared 8 times in just a few months and then crashed. Even Isaac Newton, one of the greatest minds in history, lost a fortune. He later said, I can calculate the motion of heavenly bodies, but not the madness of men. Lesson: people chase rising prices and get burned. Now let's talk gold. From 1971 to 1980, gold rose over 20 times, then it fell nearly 65%. Here's the shocker. Gold took almost 28 years to return to its previous high. That's not volatility, that's a lost investing generation. And silver? Between 1971 and 1980, silver surged 30 times. Then it collapsed over 80%. Silver investors waited for 40 years, and even today, inflation-adjusted highs remain elusive. So silver doesn't forgive bad timings. Fast forward to 2025, gold up roughly 70%, silver up 100% at its peak, driven by expectations of US policy shifts, China's supply side decisions, global uncertainty, and rising fear in markets. History doesn't repeat itself, but it rhymes. When an asset rises this fast, future returns shrink and volatility explodes. Gold and silver don't crash because they are bad assets. They fall because people buy them for wrong reasons, fear and greed. When everyone piles in late, risk rises. Prices stop reflecting fundamentals and start reflecting crowd psychology. And markets can reverse quickly on policy shifts, profit taking, or macro surprises. We saw that clearly in silver's sharp swings in late 2025. The asset isn't a problem, investors' behavior is. So what should you actually do? Asset allocation, not speculation. Decide what percentage of your portfolio belongs in precious metals. Balance it with equities, bonds, and growth assets. Stick to long-term goals, not the latest price spike. Smart investors don't chase returns, they manage risk. Gold and silver can protect wealth, but only when they are part of a disciplined plan, not a panic buy during a frenzy. Think strategy, not hype. Instead of asking, where should I put my money now? Ask, does this fit my long-term plan? If you want a simple framework to build your personalized asset allocation, let's talk.